Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 19th of December. So as we bring the year to a close, we've seen some pretty good moves on a few of the key indices and currencies that we always talk about, and they are at some key levels. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, and we can see that we've obviously, after that really big run that we had from the support base at 64.20, it went all the way up to the previous high of 66.80, and we know that's a very strong level. We obviously had these moves here that interacted with it, and we had the sell-off that hit effectively around the middle of September that pulled it all the way back down to these levels. So a really big run without a pullback whatsoever. So in the grand context of what's actually happening here, this is a very small pullback, probably a 38.2 fib if you look at it with a Fibonacci retracement of the entire move, top to bottom. And now it's pulled back to a level where we expect to find support. We've got very strong resistance here. 4 or 5 different touches of that resistance. It finds itself there right now, and a 20 moving average to help bolster it as well. So all really important support levels that can give this a bit of a kick up. All we're looking for here is a series of higher highs and higher lows on a smaller time frame, like a 15-minute or a 1 hour, and then we'd be looking at targeting the 66.80 in the first instance. I don't know if I'd be going past that just yet. I think I'd rather let it just break through and see if it can find its own way up to the next level. We know we can obviously get up to 69 and 70 cents pretty quickly once we get past that level, but this has been a very tough level to get past the 66.80. So that would be the first trade that I'd be looking for, especially if it's prior to the new year. We're looking for just a series of higher highs and higher lows on a smaller time frame, and then effectively just that move up to that 66.80. If we get a break below, so if it does eventually break this support and find itself trading on a daily under 66, so sort of that 6 or under 60, sort of 65.80 ish, then I'd be looking for a move all the way down to that low 65 again, which is this middle line here, where there is the next level of support. So a breakdown from here, a close below, say 65.80 on a daily, and then we'll be starting to target that 65 flat. Pretty small ranges, but very solid from a technical standpoint. So pretty good trading there. All right, we'll move over to the all-important dollar index. Now, look, this one's trying to rally off a bit of a base that it found here at around that just very low 98. It broke 98 just briefly and then kicked up fairly fast. Look, there's no question it's in a lower high, lower low sequence. So we've got a prevailing trend that's down now on a daily. So we must be mindful of that. It's not like, we're anticipating that it's going to go long from here, but it is possible that it might pull back to a 20 moving average. I'm thinking probably 98.80 as the target for the short-term pullback, and that's where the 20 moving average is. So if we see any market action over the next little bit in today's trading, or just in the last session of the US, and it's starting to show momentum up, I'd be targeting that 98.80 to 99 level as the potential reversal zone. We've got moving averages crossing now. The 20 and the 50 have crossed, obviously, but if we can get that market up to the 20 moving average, that would be a reasonable resistance zone, and that would continue our lower high, lower low sequence. And I would look at 98 probably as the target for the short. If for some reason, if we don't get a rollover on the smaller time frame, we wouldn't try to short it, obviously. So we are looking for that rollover at that potential reversal point before we look at shorting it back down to 98. But if it does eventually close up above that daily, at the 20 moving average on the daily, and we're trading above 99 on a daily close, then I'd be starting to target those highs again at around the 100.50. That would be the target for me on the upside, but it's got a fair bit of work to do before we look at that. It's got to cross the 20 and the 50 moving average, and that's going to take some doing, especially seeing as though we are in a lower high, lower low sequence. So the momentum is definitely down in terms of the daily prevailing trend. So certainly one to keep an eye on. All right, over to the S&P 500. Now this one's similar in the sense that it has actually pulled back after a big move. You can see that we've got a very long sustained move, even though it crept up slowly over the those period of a couple of weeks there. It sold off fairly sharply, but we're only sitting probably at about a 38.2 fib as well. You can see from the range from here to the top, there's probably only a 38.2 pullback, maybe just slightly deeper, but there is a lot of resistance here as well. So you can see the resistance through this area here. It was then support at this level. And what's important, the thing I want to highlight is that this effectively hammer candle that did reverse that downtrend there did pull up to this level. So it is an important level around that sort of 70 or 67.50, sorry. That's the level that you're looking at it for a potential support zone, a roll reversal zone, 38.2 pullback. any move above the 20 moving average. So if we see a series of higher highs and higher lows on a smaller time frame, I would like to see it above the 20 moving average. Then I'd be targeting all-time highs. Yeah, basically at 69.20. I think if we get a break above here, especially if it happens before the end of the year, to see if that Christmas rush kicks in, I think probably 7,000 would be the target. It'd be hard to see it not getting there if we get a break past this level here. I think it wouldn't just break it. It more than likely would move that extra 70 to 80 points to get it to the promised land of 7,000. But it's got a fair bit of work to do before it does that. And it is at a level now where if it's going to reverse, this is the area it's going to reverse, because we've got resistance and we've got a 50 moving average and a key level at 67.50. So a daily close below here. So if we're trading under 67 on a daily, then maybe the Christmas rush is not going to happen. And I'd be starting to target that sort of 66.20 in the first instance, which is this level here. And failing that as a secondary take profit, the 6,500. So really it depends on what the daily does. If the daily can get itself back above that 20 moving average and starts to trend up, we know we're looking for that all-time high. And if it does roll over from here and we start to trade underneath the 67, then we're going to start looking at that 66.20 and 6,500 as the targets for that. So pretty good trading there as well. Over to gold, and the gift that keeps on giving, the trade of probably 2025 really, it's just been a powerhouse right through. Look, big doji candle in the last trading session, as you can see, but it did all but hit an all-time high. I think it just got there. It might have just touched it. Didn't create a new one, but I think if we do get a break past this level, the last 5 candles have been doji-ish like in the sense that they have been reversing. You can see big wicks on the upper end. And look, it's really peppering the high. And I think if it does get past it, I think there's a reasonable chance we can see a 4,400 or even maybe a 4,500, because generally when gold does break to a new high, it does explode a little bit and gets a bit of a run on happening. So I wouldn't be looking at shorting it right now, but if it did start to lower high, lower low sequence on a smaller time frame, I would be starting to target the 20 moving average as the next potential zone. This 42.50 would be the area I'd be looking at, and that is equal to these highs here that both pulled it up just temporarily, but it definitely did pull it up. And you can see here we had quite a few wick touches of that level. So yeah, reasonable area for it to potentially roll reverse. But also if it happens fairly quickly and it happens in the next day or two, the 20 moving average will also be there to help bolster it up. So if we see that price action kick in, that's what we're looking for. We'd be aiming for the all-time high in the first instance, and then we would be looking for a move above there. If we get a daily close above that level, we'll be looking at 4,400 and then 4,500 as a secondary target on the break if it goes up really, really sharply. I wouldn't be looking at shorting it any lower than the 42.50 if we start to roll over until it actually really proves itself. I think that's a dangerous trade because we're seeing a lot of upward momentum and it's been really, really strong in that instance. And finally, we'll move down to Bitcoin. I think that it's the one that interests everybody. Look, there's some interesting price point movement over the last couple of weeks, actually. Yeah, we sold off from these highs. It failed to get above that 92,000 as we almost anticipated. I mean, we could see that when we were struggling at this point here and we were getting those reversals, it was a telling tale that it was actually really battling to get past that level. And once we start to see the weakness, especially when we see those wicks happening and we see a breakdown from this level, a reasonable chance it was going to get back down to around that sort of 85. Look, there's a base here. We can see it's touched it 3 times, so we have to respect that base. But it has actually failed to get above the 20 moving average a few times here as well, as you can see. And the wicks are fairly resilient in the sense that the buyers tried to push it up higher, failed each time, and found itself back trading here at 85,000. I think a break of 85,000 and I'd be starting to target the 78 as the next move. There's a reasonable chance it could get there if we get a break of this level here. I don't think that if we do test this level and it gets broken and the daily's trading underneath it, I think it might have enough momentum to push down. We're still in a downtrend. There's no question about that. We haven't seen a higher high, high low sequence to reverse this trend. So I think that the opportunities are still on the way down to 78,000 if we get a close below this level here on a daily. And it needs to get up above the 93,500 for me for daily before we start looking at longs. And if it does that, then we'll start to target the 100,000 as the next target for Bitcoin. So certainly some interesting trading coming up on a lot of the key majors, but be mindful of the time of the year that we're at. And yeah, the volatility can increase a little bit, especially as volumes start to decrease. So thank you very much for joining me today. And actually for 2025, this is our last one for the year. We'll be back again in a couple of weeks with the next Friday Market Watch. But thank you so much for joining us. Keep an eye on the trades. Yeah, keep your stop losses relatively tight over the next little bit, just due to the volatility around the Christmas New Year break. But I hope you all have a fantastic Christmas and New Year period, and I look forward to seeing you early in the new year. Thanks, everyone.